to our crypto session. It is 7 p.m. and we're going to go ahead and get started. We're probably going to have some more people join us soon, but we want to start on time. So first of all, house rules. If you guys have any questions about crypto, please feel free to drop them in the chat and we will try to answer them as we move forward with the presentation. We don't really have a format for it. We're going to start with a general overview and kind of narrow it down to specifics such as trading and platforms and wallets and all this stuff. So feel free to start dropping questions, and like I said, we'll scroll through them after we finish. That being said, I'm going to get started with just sort of a general overview of the space, right? I don't know what the level of knowledge of everyone in here is, but I'm going to assume that everyone's starting at zero. Yeah, that's the safest way to begin this. Can I just get an okay in the chat room if everyone can hear me just fine? I'm gonna give it a couple of seconds. Awesome, perfect. All right, great engagement there. So what is blockchain, right? I'm sure that you guys know by now all the hype around crypto, but do you truly understand the difference between blockchain and crypto? A lot of people think of them in an interoperable way, right? They think that they're the same thing, but actually they're not. So truth is, blockchains have been around since the 80s. This isn't something it's not new tech. It's not really something that's just now being created. But it is now when it's getting more hype, right? So we're just now hearing more about Bitcoin, Ethereum, all these other chains, and especially the DeFi or the financial layer on top of blockchains, which is the crypto. So blockchain is really just a distributed ledger, right? It's where you can store information that is immutable. It's there forever, so no one can go in there and change any of the information that's stored on the blockchain. It has not been hacked yet, and it's also transparent, right? So anyone can see transactions on the blockchain. So this technology has multiple applications. That's kind of where it all started. And the OG of the industry, to say so, is Bitcoin, right? So the Bitcoin white paper came out a couple of years ago, and ever since the space just exploded. Now, there's not just one blockchain, there's multiple chains and each have their own features, right? So of course we have Bitcoin. Bitcoin is its own blockchain, and it's obviously the most well-known at the moment, has the biggest market cap. And it's also, it can be viewed mostly as a commodity instead of a blockchain to build on top of. Then we have the second largest, which is Ethereum. Ethereum enables smart contracts, which means that you can build other projects on top of it, right? So there's these things called decentralized applications, which is just like apps that you have on your phone, except that they're built on the blockchain, so they're decentralized. They fuel different ecosystems. So whether you're building a game, you're building a marketplace, you're building, I don't know, a store, whatever you're building, you can do it on top of blockchain if it makes sense, right? Does it make sense to have a decentralized database to store data on? Then yes, you should probably build that on the chain. And then we have other chains, right? We have Polkadot, Avalanche, Solana, Flow. There's so many protocols out there that are popping up everywhere, and each have their own features. Some of them have higher transaction throughput. Some of them have, they're lightweight blockchains. Some of them have whatever other features, and they differentiate from one another. And they will capture the industry that they make sense for, right? So some of them are great for enterprise purposes. And so on and so forth. Now, each of these has their own problems, but we're not going to get into that right now because we're trying to keep this as not just Ethereum, but also Bitcoin, right? So crypto is literally has to do with the financial part of the chain, because we have on the one hand engineering, the technology, and on the other hand, we have the financial sector. You put them together, you get the fintech sector, and that's crypto, right? So crypto can be anything from the coins that we all talk about and trade each day. It could be the utility tokens that allow you access to a certain application. It could be, it could be just these hype coins that we talk about. So there's no real definition for what crypto is, but it has to do mostly with the financial sector. I'm going to pause a little bit to take a look at the questions and see. All right, so nothing yet. How about we move into how we get, how do you get onboarded in crypto, right? What is the first step that you take? How do you buy your first Ethereum? How do you buy your first Bitcoin? And personally, I prefer to go to the trusted wallets and the ramps that have higher limits for how much you can buy. Obviously, a lot of us go to the trusted sources such as Coinbase because it's easy and everyone has heard, the name floated around, especially if you guys are in the stock channels as well. You've heard Coinbase quite a lot. But there are other platforms out there that have different benefits, right? So if you're looking for something that maybe has higher limits to what you can purchase because you're a trader and you need to be able to trade larger amounts, or maybe you just prefer a safer wallet that allows you to buy cryptocurrency, then obviously there's plenty of choices out there. For Bitcoin in particular, a lot of users use exchanges because most exchanges offer what they're called fiat on-ramps. They're connected to either your bank account, so you can wire cash or a credit card, and they allow you to purchase large amounts of crypto. So obviously the most popular one right now is Binance, just because it has low fee and amazing rates for cryptocurrency. But if you're in the US, you probably have access to different exchanges than if you're in other parts of the world. So it's really hard to tailor this conversation for specific audiences. Because everyone's from, like I said, a different part. So in the US, for example, a really popular one is Kraken. Kraken is really, really tailored to the US market, but it also has ridiculous fees and really terrible prices for crypto. So, everyone's trying to get around by using VPN, sometimes it works, sometimes it doesn't. And one thing you cannot get around though is KYC. So depending on how much you want to buy, let's say you want to buy $100,000 worth of Bitcoin, you will have to KYC on whatever exchange you end up buying on. And this is where you will be allowed to do it or not. You cannot get around KYC laws unless you're a non-US, non-Canadian resident. So that being said, that's kind of where you start, right? You go to an exchange like Binance, you buy your first crypto, or maybe you're an Ethereum fan. Personally, I am what they call an Ethereum maximalist, and I've been in the space for about 4 years now. And I like to use these decentralized wallets just because they're a little bit safer. And one wallet that I use to buy Ethereum is Dharma. Dharma allows you to buy up to $25 US per week. You can just link your credit card or bank account, and then you can actually have access to all the DeFi projects and platforms as well. I'm going to get into that maybe later on a different session because there's a lot to cover there as well. Yes, so KYC means know your customer. It's basically this process where you submit proof of identity. So something like a copy of your passport, ID, or driver's license. And you also submit a proof of address. So like a utility bill, bank statement, or I don't know, whatever paper they ask you. And maybe take a selfie, and it goes through an approval process. It can take up to 5 days, 5 business days, and then you're allowed to access all the features of the platform. I think Binance has different tiers. So if you don't KYC, you can only trade so much and you can only buy so much Bitcoin, for example. But if you KYC, those limits increase, right? Because as you try to trade more and more, they need to have to run even more checks on you. Mostly this has to do with anti-money laundering laws, or AML, sometimes they're called. They need to know where your money's coming from, right? If you're trading millions and millions of dollars, it's like, okay, where did you make it? They're trying to avoid pretty much illegal activity. That's what's related to. We're not going to go into the regulatory sort of details right now. So to keep this moving, easiest way to go is to buy it, like I said, on one of the major exchanges if it's allowed in your country. And then depending on what you want to do with this crypto, there are different platforms where you can store it, right? If you're buying to just hold, then the wallets that you would use are different from the wallets that you would use if you were trying to actively trade, like day trading, right? Because when you want to store crypto, you want to make sure that it's as secure and safe as possible. So you probably want to use cold storage. Cold storage just means a hardware wallet that you would connect to your computer via USB or Bluetooth, right? Like a Trezor or Ledger, those are the most popular and secure ones. And that's where a lot of sort of crypto OGs that bought, like years ago, that's where they store it. But if you're trying to trade, then you most likely want to keep it somewhere where it makes it easy for you to trade, like Binance. Binance has its own wallet because that makes it easier for you to transfer in and out. All right, so I kind of covered the basics. Let's focus our conversation to buying crypto and storing crypto. Is there something in particular that you guys want to know about wallets or exchanges? If not, we're going to move the conversation to trading, because I'm assuming the main reason why you guys are here is, okay, I see, hold on, I see BlockFi here. All right, let me just cover wallets real quick. So wallets, like I said, have different purposes, and they can be used either for long-term storage. In this case, I would recommend super secure wallets like Ledger or Trezor. Right? You can actually look them up and read about them before you buy one, but these are the most secure on the market at the moment. And it's a physical device that you have to take care of, make sure you don't lose it. And all your crypto would be stored there locally. Then if you want to buy coins and you want to earn passively on them, this is something that's called, in DeFi, decentralized finance. It's where you buy something like Bitcoin, Ethereum, Polkadot, Cardano, and you can earn passively up to like 20% per year APR. So for this, you would have to go to one of the DeFi wallets that enables this type of passive earning. In the US, I believe that something that's available at the moment is Voyager wallet, BlockFi, and Celsius. There's not much difference between these three except the rates that they have for different cryptos. So I would recommend that you each check the rates for the cryptocurrency that you hold and see which one makes more sense. If you're looking for a place where you can find the rates for the different coins, you can actually go to coinmarketcap.com. Let me screen share real quick. All right, perfect. Can you guys see my screen? Awesome. So if you go to CoinMarketCap, then you can go to products. In products, you have interest. And in interest, it shows you all the different cryptos. So let's say that you own some Bitcoin. And here it tells you the different platforms and how much you can earn on them. So let me just move this. So for example, on Ledin, whatever this is, I've never heard of it, you can get 10%. Stormgain, you get 10%. BlockFi gives you 8.6%. Celsius, 8.43. And then you can go through each of the cryptos here, like Polkadot. Polkadot on Celsius gives you 11.20%. And all you have to do, again, is just store your cryptos in these wallets. So let's say maybe you buy some Chainlink, and then you're like, where can I put my Chainlink so that it earns passively? You go to maybe Nexo. Nexo gives you 8% APR. Celsius gives you 5.66. You have some Aave. Aave is only on Celsius, gives you 7.45. So then based on whatever crypto you own, you can decide which wallet makes most sense for you. So this is a great place to start if you want to just earn passively, which, by the way, can I just say how insane this is compared to what you're getting from a typical savings account? I don't know what country you guys are in, but typically you get 0.5% or maybe you have a high yield interest account that gives you 2-3% tops. So the fact that you can get up to like 12, 13, 14% by just keeping your crypto in these wallets, I think it's insane. So highly recommended that you do have passive earning on your coins if you're just going to hold and not trade. So I'm going to stop here, and 0.05%, right? So huge difference, right? And cool. I'm kind of done. I feel like I've covered a bit. So now we're going to move it over to trading. Nick is going to cover this, but I will answer any question after he's done presenting. So Nick, feel free to take over.
Good?
I'm good.
Can everybody hear me, or is there an echo right now? Okay, sweet. We'll get started. So I'm just gonna share with you guys a couple resources. Like if you're interested in trading, you're probably going to be using a similar platform, if not Binance. So with Binance, they have the Binance Academy, which is it's basically several articles that have been constructed by the Binance development team to just give you guys an idea of how to understand the platform, what things you guys will be looking for, and kind of like different ways that you can utilize and create income through the Binance app. So you guys can Google that yourself, Binance Academy. There's tons of info on here. You can scroll through and kind of like pick and choose. Like if you're interested in trading, you can select that as kind of a filter, and so on and so forth. So when you get into an exchange screen, you're going to have basically your tier 2 market orders here, and then you're going to have a selection of pairs. So when you're selecting crypto pairs, basically like a crypto pair is two assets that can be traded between one another. So like the major coins like Bitcoin, Ethereum, BNB, USDT, they're going to have several trading pairs. And if you are getting into trading, you're going to want to pay attention to these pairs. So like normally when I'm trading, I will pick a base pair. So if Bitcoin is my base pair, so everything that I trade will be through Bitcoin. And when I'm doing like TA on different tokens, I'll be always looking for the tokens that are going to outperform Bitcoin, and I'll trade my Bitcoin for those tokens. So like basically the concept is when Bitcoin is bullish, you want to be stacking sats, and you'll be increasing and compounding your Bitcoin asset. And then when market direction changes for Bitcoin and we go through a pullback or whatever, I will sell my trading capital Bitcoin for a stable coin like USDT. And then I'll be watching and I'll be using the USDT pairs to trade. And like with doing that, you're increasing like the total value of your account so that when Bitcoin flips again in your direction, you can swap back, buy more sats at the low, and then start trading your BTC pairs again. So like developing a like Bitcoin pair strategy is really going to be dependent on your goals. Like if you believe in the crypto space long term and you believe in Bitcoin long term, you're going to want to stack sats. If you just want to make money and transfer USDT, transfer your earnings back out, you can by all means play the USDT pairs throughout any kind of market condition. I do recommend for new traders to stay away from the leverage options. Like Binance provides like derivatives markets, futures markets, where you can increase volatility of your positions by using leverage. But if you're not making money trading pairs and you don't have a positive strategy trading pairs, you're just going to lose your money faster by increasing volatility. Also, like the crypto markets, like I always recommend for people to hold long positions as well as have trading capital. Like if you're trying to trade 100% of your capital, you're gonna eventually lose your mind. Just like crypto trades 24/7. So if all your money's in USDT and you're always trying to trade and you're trying to use leverage on every trade, like you're just gonna wear yourself out. You're gonna overtrade and you'll end up getting into positions just to be in positions rather than making smart decisions and like making money basically. So an important trend that I think every like new trader should follow is the Bitcoin dominance trend. I'll see if I can actually bring it up for you guys. Can you see that? Okay, so yeah, the Bitcoin dominance trend, basically what this is it gives you an indication as to where Bitcoin is in reference to the altcoin tokens. So if you look at this, like the kind of the margin here is percentage of Bitcoin market cap compared to the rest of the crypto market cap. So right now we're trading at 51.7%. So Bitcoin's market cap conquers 51.7% of all crypto. So if you're trying to kind of define direction in the crypto market and you want to know whether you should be trading altcoin pairs, whether you should be trading majorly altcoins, this trend's going to help you help give you that direction. So you can see like over the last kind of whatever month, the altcoins have outperformed Bitcoin, and that's why this dominance trend is dropping. And it can kind of be for two reasons. Like you'll see rallies in the Bitcoin dominance trend. It doesn't mean that Bitcoin is going up. It could mean that the altcoins are going down more than Bitcoin. Like if you see, like periods of extreme volatility in the crypto market, a lot of times that's what you see is the altcoins crash harder than Bitcoin. Bitcoin falls 5%, Ethereum, Cardano, some of these other tokens will fall 15, 20%. And that can give you fluctuations in this trend. So it's not necessarily that if this trend's going up, Bitcoin's going up, or that you should be in Bitcoin. It's just kind of an indication. So I will touch a little bit on derivative markets if you guys want, but there's quite a bit to it. So I think we could probably do another session on that later on. So yeah, I don't normally trade the margin markets. Like the margin markets on Binance, they're basically like any other margin account, right? So they'll let you hold assets in that account and then leverage and buy more assets against your assets. So it's a little bit less volatile, but you also have a little bit less control. You have to really be paying attention to what you're holding as a stable coin to leverage against. Like say you have Bitcoin in there and Bitcoin starts dropping and your other plays are dropping as well. You're kind of just doubling your risk of being margin called or losing your money. So I currently trade on two different derivative markets. So I will trade the Binance USDT futures market. It's a perpetual futures, so it doesn't have an expiry. So if you do want to trade futures contracts, they kind of come in two ways. You'll have quarterly futures, monthly futures on some platforms, and then perpetual futures. So with quarterly futures, you'll have an expiry. So you're kind of creating a lot of speculation in your trades. It's kind of similar to buying options contracts. If you have more time going into that expiry, your contracts are going to be more valuable. And as you get closer and closer to that expiry, if you did miss the timing on the trade, they're going to eventually expire worthless. So with the perpetual futures contracts, there are two different kinds of contracts that you can play. So you can play, oh, can you see this or no? Oh, is that better? Get it? Yeah. Okay. Okay, yeah, so you can see on the futures platform here now. So yeah, there's two different kinds of contracts that you can play. So you can play cross margin contracts, and basically cross margin, it's going to let you margin the entirety of your account. So I don't recommend it for like new people, really anyone, because it means that your risk isn't defined. Like you should always define your risk when you're getting into a trade. And if you're using cross margin, it's going to allow your position to go more than 100% negative. So say you're in a 10x leverage position and the token that you're holding drops 10%, your position is going to go to 100% negative. on an isolated margin, it will automatically liquidate you. And say you had $1,000 in that position, that $1,000 is now gone and your asset's gone. In a cross margin position, it's going to allow you to access the balance of your account to top up the margin of that position. So say you're playing like a higher leverage trade, 25 or 30x, and your position goes down 100%. You have $1,000 position, but you have $5,000 in your account. It's now going to start to access that $5,000. And if you did get a period of extreme volatility and didn't have stop losses, now your whole balance is going to be gone. So I don't see why you would need to use the cross margin. There are benefits to it, I guess, if you're running several positions, but if you're new at this, like use the isolated margin. So these tabs here will let you also adjust your leverage. So like up to Bitcoin, you can go 125x. Again, there's no reason that you would ever need to do that. Like I recommend people, like with Bitcoin, I will trade a little bit higher because there's a lot less volatility. But with altcoins and stuff like that, like 5-10x is plenty. And like any kind of trading, if you're trying to make it all in one trade, you're never going to be successful. So yeah, so that's basically it. Like the other platform that I use, and I actually like it a lot better for Bitcoin, Ethereum, and XRP, it's called Bybit. And so with Bybit, they let you do what's called an inverse perpetual futures contract. So basically, you say you're trading Bitcoin, all of your profits, rather than being in USDT, will be in Bitcoin. So it lets you leverage against your Bitcoin to basically inversely buy USDT. And it basically lets you compound your Bitcoin. So if you think about it in a sense, like say, okay, you sold one Bitcoin for USDT and you leveraged it at 5x on like a regular perpetual futures program, you're actually only leveraging that Bitcoin at 4x because you had to sell the Bitcoin to do it. So if you are playing positive and say Bitcoin goes up $1,000 and you made $5,000 on that trade, you actually only made $4, because if you went and bought the Bitcoin back, you'd have to pay $1,000 more for it. So it's a good tool, and it's the reason that I usually use Bybit. And the same kind of analogy applies with that directional margin, or with your directional pairs, is when I'm bearish on Bitcoin, I will sell my Bitcoin and then I will trade on the USDT perpetuals. Because if you're shorting Bitcoin and you're gaining sats for shorting that Bitcoin, you're actually, like you're losing value on your Bitcoin while you're, gaining more Bitcoin. So there's a couple different strategies, but yeah, this is basically what I do. I think we will probably have some more trading sessions as far as crypto goes, and I can explain to you guys a little more as we go, but I don't want to overdo it either. So does anybody have any questions in regards to
Can you tell us if the typical charting techniques apply from stocks to crypto, trends, indicators?
Yeah, so like as far as trending goes, like I find that normal stock trade trends, like trending crypto is a lot different. Like a lot of the time I find it's more like Forex trading, like you're really looking for support and resistance trends, and if you can get volume bounces off of those trends. Whereas, I know in like regular stock charting, you guys are playing more formations, but it's very similar logic.
So many altcoins, how do we select which one to invest in as a beginner?
Basically, like, especially if you like with altcoins, I always look for liquidity. So if it's very thinly traded, you don't want to be caught in a position that you can't get out of. So, if you're trying to like say do a SAP pairing or a BTC pairing with say like Dogecoin or something that has enough liquidity, that's kind of what I would be looking for. And then just same like chart fundamentals, like which charts are going to outperform the base pair that you're using. So Ricky had one here. Do I use different accounts for trading and for swing trading? I do, and I think it's a good idea. Like basically, like I have a long-term assets that I just hodl. Like very seldomly am I swing trading all of my assets. So I have like a cold wallet where I'll store kind of my long-term projects that I believe in. And then I have a swing trading account. So I actually recommend that too, especially if you are getting into derivatives trading. Like I will do like a 3x kind of Bitcoin swing trade, whether it's long or short in one account. And then I'll do like higher leverage day trades. And I find that really helps to fight off the FOMO of missing a trade. Like a lot of the time, like if you get into the crypto market, you'll be going to bed thinking, oh, I need to be in a trade, I need to be in a trade, I need to be in a trade. And by having some of these lower leverage swing trades, it kind of gets rid of that FOMO and just allows you to know that, okay, if Bitcoin does pump 10% while I'm sleeping, I am still profiting from the move.
Wait, what if Bitcoin has a crash? Will the altcoins also have a
So
dip?
I'm gonna take the question on so many altcoins. How do we select which one to invest as a beginner and recommendations? So let me just share my screen again so you guys know where to start. So CoinMarketCap, which is the website that I showed you guys earlier, is a great place to kind of get intel about all these coins, right? So if you just go to the main site, the first thing you see is the list of all cryptos categorized by market cap, right? So you have Bitcoin, Ethereum, Binance. Here you see the market cap for each. So this is how you know these are the top coins. Obviously, if they're top coins, it means that they're top projects. It means that they're trustworthy. And they have deep liquidity, as Nick already mentioned, that you don't want to trade a coin that doesn't have a ton of liquidity. So this is a safe place to start. Just gonna look at the maybe top 50, top 100. You can click on one, right? So what is ADA? And once you click on it, here tells you everything you need to know, like the market cap, the volume that's traded, what's the volume change in the last 24 hours, circulating supply. Then you can look at stuff like it has a chart here that also connects to trading view, so you can kind of see its evolution over time, how long it's been around. This one's been around since January 2018. At the bottom, you also get some information about these tokens. So it tells you what is Cardano. It's a proof of stake blockchain, yada yada. And then you can actually, once you go down to it, it tells you where it trades. So every time you find a token, it's simply that you're interested in, maybe you heard a ticker or whatever signal you found, you go to the search box, you look for it, and then here at the bottom, you see where it trades. Most of them are available on Binance, but some are not. So these are the other platforms where you can find it. You'll have to create an account on each of them. So that's the part that sucks, but then you'll be able to trade it there. And once you get acquainted to the top ones, obviously you can go lower into, you can categorize them by different metrics, right? So maybe you want to go by volume, maybe you want to go by which one has had the biggest changes in the last 24 hours or in the past 7 days. Obviously, if you're day trading, you probably want a lot of volatility. So this is a great place to start. And then you can also get involved in like Discord channels, Telegram channels, crypto Twitter is super active. That's where you're going to find a lot of signals about which cryptos to buy and sell. So I'm going to stop here and take a look at the questions again. I posted my watch list a couple of days ago. I'm going to post them again and pin them in the crypto channel so that everyone who comes to us can take a look. If they like those coins, those are the ones that I'm holding for life. You guys can trade them, hold them, whatever you want.
Wait, will a dip in Bitcoin cause a dip in like all other altcoins?
So yeah, I'm just going to touch again on what I meant about the trading pairs. So like when you look at, um, so when you look at your exchange, like most people are going to be wondering how to buy like their first crypto. So basically it depends on what you originally bought as to what pair you're going to trade or exchange even. Like if you want to long-term invest in crypto, this is basically where you're going to start. Like there's several different ways to exchange tokens, like decentralized exchanges and then these more mainstream exchanges. And so like say you bought Bitcoin, you're going to go into the Bitcoin trading pair and you wanted to trade it for Cardano. So you type in the ticker for Cardano, ADA to BTC pair. So this is going to give you your tier 2 price list. And then these are all going to be posted in like percentages of Bitcoin. So you can see how much volume is being traded here, how much is available, and kind of where the price is moving as it moves. So if you did want to pick up, say, trade whatever, half a Bitcoin for Cardano, you can select the price here, change it for whatever tier 2 price you feel like you want to buy. If you want to put in a waiting order down here, then you put that in, and then you put the amount that you want to buy, the amount of Cardano that you want to buy. After that, if you're logged in, it'll give you a purchase. You buy it, and then you'll see it in your wallet show up on Binance. The strategies around trading pairs, I guess, are a little more in depth if you actually do want to trade crypto. But as far as like just exchanging your tokens for different ones, this is how you're going to do it. There's also like some of the more mainstream on ramps are better. Like you're going to get better rates fiat to crypto through Coinbase and through say Bybit. But if you do want to use the peer-to-peer trading on Binance, you can do that as well. So basically peer-to-peer trading, it provides a platform for people who want to get their fiat money into crypto, as well as people who want to get crypto back into their bank account into fiat. So basically, Binance acts as like a mediator, and they hold the crypto that people want to sell. So you would go in here, say you want to buy USDT or Bitcoin. Binance provides you a price list as to what people are selling it for. You can see this person, so they want $1.31 for every USDT. They have between $700 and $1,500. So if the amount that you want to buy is in that range, you would just go buy USDT. In. Okay, so it wants me to log in, but after that, basically it will provide you an email to transfer. So you e-transfer the person who's trying to get their crypto off of the space and send them a verification, click that you have transferred them money, and then Binance will release the funds to you, and then they'll get the fiat money. And you can do, I've used it to take money out of crypto too. It's kind of yeah, like it's an easy way to do it if you want to like cash out a few $1,000s of profits and not worry about like it's instant, right? Usually if you're withdrawing from an exchange, it's going to take you 2 to 3 business days, whereas this will take you 15 minutes.
All right. if you guys don't have any questions for Nick, I'm gonna get into ICOs, which is what everyone seems to be very interested in. So before I even start on this, what are ICOs, right? I think we have a somewhat of a clue what they are, but not really. ICO stands for initial coin offering, and it's the moment that a token issues the coin for public sales for the very first time, right? So it's kind of like an IPO, except that it's for early stage companies. IPOs usually happen for mature companies that have been around for a couple of years. They have some revenue, they have traction. ICOs are for super early stage, high risk companies with no proven business model. They're basically crowdfunding in order to support their project. Of course, this is not for all of them. Some projects already have the tech built out and then issue the coin afterward. But a lot of them are raising funds in order to build the protocols. I personally don't advise anyone to invest in ICOs unless you have been in this space for a couple of years, or if you are accompanied by someone who knows what they're doing. The reason is because you will get scammed. Okay, so if every single time there's an ICO, there are 20 different pages, landing pages that will try to take your crypto from you. They will try to pretend that they're the real project, but in reality, it's just a fake page that will ask you for your ETH or whatever coin you're investing in. So they're very high risk. And if you're not familiar with how to navigate crypto platforms right now, then you don't want to navigate a platform to invest in an ICO. That's one of the biggest risks, and you will lose your money, like I said, unless you know what you're doing. The second part is that it's not available to US or Canadians. So you need to be from a different part of the world. And that's why I know majority in this chat are from either US or Canada. You cannot invest in ICOs for a regulatory reason, right? So the SEC does not want you guys to be part of those sales. Why? I don't know. You can take it up with them. There's a ton of literature online. You can just Google it and find out. So that's another reason why I haven't really talked much about them. I prefer to give advice that's that's available for everyone. I don't want to give isolated tips and tricks in crypto that only apply to a few. And then as far as so no, you can't use a VPN because you have to do KYC for some of them. So when you do KYC, again, that means basically you have to submit proof of your residence. They will see that you are a citizen of this country and that you live in this particular country. So VPN won't help you. And that's just kind of what ICOs are. They're super enticing, I know, but actually the way an ICO performs gives you a really good indication of how the token will perform like later down the road, so you guys can trade it after the fact. So kind of keep an eye on who's launching a new token, so you can scoop it up at a super low price as soon as it's liquid on an exchange, and then you can just start trading it. And about Mina, I mean, Mina was just a one-off. I'm actually on automate mode when it comes to investing in ICOs. So I invest in like 3, 4, 5 a month, depending on how often I fund really good ones. Mina was just the most recent one that I invested in. It's not yet liquid, so all the stories about turning into 800K, it did, but that was the future price, right? So it wasn't the actual underlying token that was priced at whatever it was priced at. It was just the futures trading at that price. So obviously futures are a good indicator of what the actual token would trade at, but it's not the token itself. The token itself won't be liquid until the end of May. So at the end of May, we will know exactly what Mina is trading at, and we can make a better assumption. But again, this is just the fun of ICOs. ICOs are where you put a couple of bucks in and you can turn into a millionaire. There's actually a more amazing one, a blockchain called Flow. The sale happened in October of last year. Literally just put in $1,000 and people woke up millionaires within months, right? It went to, I believe, something like 100x or 80x or 800x. I don't even remember. It was some insane return. And they made a ton of money. So yeah, Flow is the one. It's a blockchain for gaming by Dapper Labs. So Mina is just one of the many, like I said. Solana was also a super successful one. Casper was also a successful one. There's a ton of protocols that have incredibly good ICOs, just because protocols tend to pop. I mean, Bitcoin is a protocol, Ethereum is a protocol. So in general, when a protocol issues a coin, it's probably going to be a big deal. So yeah, that covers ICOs. And yeah, unfortunately, I'm sorry that you guys can't invest if you're from one of these countries. Get married in Europe, I guess. I don't know. All right, guys, so there's no more questions. It seems like the chat is kind of dying down. So thank you all for participating this evening. I hope you found it interesting. I'm going to be posting some written resources in the Discord channel and pin them so that we don't get the same questions over and over again. I'll be online almost every day, so feel free to ask me any questions in Discord, and have fun trading. And you guys have a great rest of the week. Bye all.